I wanted to take a look at the semiconductor sector. Specifically, I want to look at SOXX stock, SOXX stock versus SMH stock. These are both ETFs. The SOXX stock is the semiconductor ETF from iShares, and then Van Eck does SMH stock. Now, which one's better? Is SOXX stock better than SMH stock? Actually, they're really roughly about the same. When you overlay the two ETFs over top of each other, it's not much of a difference. The cost ratio, zero difference whatsoever. Broadly speaking, however, you may want to add the semiconductor sector into your portfolio because it significantly outperforms the S&P 500. So let's take a look at SOXX stock, the semiconductor ETF, as well as the SMH stock, the other semiconductor ETF. Let's jump in. I'll show you the charts and show you what you could get involved in. If you are just finding my channel for the very first time, thanks so much for stopping by. Make sure to hit the like and follow button. What I do here is I break down stock market analysis. I looked at all the little sectors of the stock market itself. I look at stocks themselves. So if that's the kind of content you're looking for, and analysis on individual stocks using value investing principles, make sure to hit that like and follow button. Here we are looking at the iShares SOXX stock versus Van Eck SMH stock. Again, these are both ETFs for the semiconductor sector. The semiconductor sector has been on fire, as you can see, going backwards from 2016 to 2024. That period of time, up about 466 and 480%. Respectively. So the bar chart on this is iShares SOXX stock, and then Van Eck SMH stock is the orangish yellowish line there. They are almost direct parallels to each other. There are slight differences, and it's really the holdings. SMH stock really goes in heavy with two stocks and then kind of evens out on all the others, whereas iSOXX kind of spreads things out quite evenly. Nonetheless, semiconductors, the semiconductor sector. When you look at this chart, hopefully you can sit there and see that there's a lot of opportunity here. Now we've got AI. AI, of course, is going to blow things up. But when you take a look at the individual stocks themselves, when you ask the question, are the individual stocks worth getting involved in? When you break those things down, which we'll do here, right here, you see that there's it's pretty close to solid investments across the board. Now, what I did was I took a look at 2024 earnings for all these companies, input them there, and you can see the yield versus today's stock price. I didn't do the next 4 quarters because it's a little difficult getting some of the information right now on some of these companies, so I just went with 2024 earnings. And this gives you a pretty good baseline understanding of what these semiconductor sector stocks would do. Advanced Micro, Broadcom, NVIDIA, Intel, Texas Instruments, or TI. These stocks, AMD stock, AVGO stock, NVDA stock, INTC stock, and TXN stock, are in the iShares. Some of them are, of course, in SMH, but SOXX stock is the one that's kind of really even paced. You're looking at like 4.5%, 5.5%, 6% asset allocation for these stocks. It's pretty even. And cost ratio is like 0.35 for both. So there's really no, I mean, you're literally asking the question, which better, a Pink Lady or apples and apples versus oranges and oranges, a Pink Lady versus a Honeycrisp. It's all preference. But when you break down the yield, which is the furthest column on the right there, 3.12%, 4.77%, 4.1%, 4.30%, 4.41%. Those yields, which is the earnings per share, projected earnings per share divided over top of current share price, those are pretty decent. Now your benchmark 10-year treasury is trading about 4.28 right now. All right, it's slid down a little bit today. Will it go higher? Well, when you look at these top holdings, the 5 top holdings in the iShares SOXX stock, that's pretty competitive. this factors in, of course, future revenue gains. These are future earnings per share. So it's very competitive with the current investment environment. Now, each individual stock may not be sort of awesome, but then another stock might be really well off comparatively. Taking a look at VanEck, the SMH stock, the VanEck Semiconductor ETF. Again, if you look over to the right-hand column, you can see the yields there for each of these. The big holders, NVIDIA and Taiwan Semiconductor, they're really heavy into these. These represent a much bigger chunk, and it's not necessarily evened out as much. So for me, which would I prefer? I don't really like to put all my eggs in one basket. If I'm going to get involved in a semiconductor ETF, it might as well be representative of the entire industry. So I wouldn't necessarily want to jump on VanEck SMH so much. They are heavily weighted with NVIDIA and Taiwan Semiconductor, which of course they are. Those two stocks are really kind of taking off right now. Given 2024 earnings per share projections and your current price, you see some upside there, some solid upside as an investment. These outperform the 10-year Treasury yield. But, and as you move down lower, there's other stocks in there, of course, which are not performing as well. That's why I kind of like the balance between SOXX stock versus, say, SMH stock, a little more so. But the semiconductor industry, of course, is going to continue to move higher and higher simply because AI is going to revolutionize so much, and so many companies are going to be shifting gears and really getting involved in AI, and it's only going to get more and more. But all those factors are already factored into these future earnings per share projections. So, when people say, oh, they're going to the moon, they're going to the moon, not necessarily. We may see the economy contract, which means there is risk to the downside on each of these stocks individually because the consumer themselves is probably going to contract somewhat. We're seeing unemployment trickle higher. How much higher? We'll find out a lot more information over the course of the next 2 to 3 months as we get more and more information from how inflation is being affected by the higher interest rates, what the money supply is doing. Is it contracting enough for the Federal Reserve to go ahead and start lowering interest rates? Or did they go too far and they really need to drop interest rates fast? If they need to do that, a lot of people would probably be hitting the buy button, but that seems a bit premature, because if they're rushing to lower interest rates, stocks would be plummeting because the economy is doing exactly that. I expect interest rates to remain higher for longer. I expect a lot of these stocks to trickle a little bit lower. Because of that, if they start moving too low, they become buys, strong buys. These companies would perform well in a solid economy. We may be entering a period where the economy isn't as solid. That's the time to step in and buy. The semiconductor industry itself, I'm going to continue to put this information up there. As I said, this is a brand new channel. It's been going for about 2 months. It's growing quite nicely, but I'll put information out on the semiconductor industry, and I break down each of these stocks individually so you have a good idea as to how well, say, SOXX stock would perform versus the broader stock market. It does outperform the broader stock market. It is a solid sector to get involved in, especially if you want to bet on the future of electronic devices and things like that. These are the biggest players in there with all the semiconductors. Make sure to hit that like and follow button. We'll see you in the next video.